Hi students, in the last class we discussed the problem on the LIFO method, last in first out. I hope all of you understand that. Okay, so that was very easy problem. Okay, so now we'll see in this session one more problem on the LIFO method. Okay, so see, enter the following transactions in the store's ledger of buy materials using LIFO method. Okay, so now whatever the chronological order the transaction is given, okay, so we have to help with the help of this information, we have to prepare the LIFO statement. Okay, so now see, on 1st January 2008 the balance 400 units at the rate of rupees per unit. Okay, and you know how to draw the format also. Okay, so like this you have to draw the format, then store ledger. So store ledger, the name of the materials, code number, okay, maximum stock level, what's the minimum stock level, ordering quantity. Okay, so the date column, in the receipts column there are again 3 columns, quantity column, rate column, amount column. In the issues there are 3 columns, quantity, rate, amount, and in the balance there are 3 columns. Okay, like this we have to draw the columns. Okay, so now see, on 1st January 2008 it's the balance. Okay, there is a stock. Okay, so there is, it's not related to the receipts as well as it's not the issues. Okay, so it's the opening balance. Okay, so on 1st January 2008. Okay, so the quantity is 400 and the rate is what's rupees 1 per unit per quantity, total is what's the 400. Okay, so on the next date what's happened, on 2nd January 2008 issued 100 units. Okay, so the issued 100 units, it means what, whatever their balance on 1st January 2008, out of the balance 100 they are issued for the production purpose or for the manufacturing purpose. Okay, so now see, on 2nd January 2008 there is a issued 100 units at the rate of 1. It means from this 400 quantity they are taken 100 for the production purpose. Okay, so the 100 at rupees 1, the amount, total amount will be the 100. Okay, again on this date we have to maintain what's the balance. Okay, we have to maintain the stock. Okay, now how to maintain the stock? So in the earlier date there were the 400. Okay, out of the 400 we used 100 units, the remaining will be the 300. Okay, so the at the rate of 1 the total amount will be the 300. Okay, so this is the closed on this 2nd Jan. Okay, on the next date, on 4th January 2008 received 1600 units at rupees 1.10. Okay, so received 1600 units means what, it is the receipts. Okay, it is the purchased raw material. Okay, like this. Okay, so now see, on this 4th January 2008 receipts 1600 units at the rate of 1.10, the total amount is what, 1760. Okay, 1760. Okay, so now again we have to maintain the balance. Okay, so what's the stock, are in the earlier date stock is 300. Okay, so as it is, keep first of all this 300 at the rate of 1, 300 total amount. Okay, and on this, in this date 600 the purchased. Okay, make it is quantity is 600 at the rate of rupees 1.10, total amount is what, 1760. Okay, so close it on this date. On the next date, just see, on 6th January 2008 issued 600. Okay, issued 600. So now see, on 6th January 2006 we have to issue how many units, how many quantities, 600 quantity. Okay, so on this 4th January 2008 what's the stock, there are 2 stocks. Okay, the first stock is what, first stock, or you can say first lot is a 300 and second one lot is what, 1600, and we have to use the LIFO method. Okay, last in first out. Okay, here we have to prepare the LIFO statement. Okay, so if it is FIFO then we have to take from the first lot. Okay, so now in this case we have to take from the last lot. Okay, so from this 1600 we have to issue 600 units. Okay, so take it 600 units from this at the rate of 1.10, it's a 660. Okay, again we have to maintain the balance on this date, so 300 as it is we have to keep, because we have not touched this, because it means we have not taken from this 300. Okay, so 300 as it is we have to maintain. Next, from this 1600 we taken 600, the remaining was stock, it's a 1000 units at the rate of 1.10. Okay, total will be the 1100. Okay, so close it on this date. Next on the 10th January 2008, refund to stores 40 units issued on 2nd April 9 2nd January 2008. Okay, refund to store 40 units issued on 2nd January 2008. Okay, so this is a printing mistake. Okay, so on 2nd January 2008. Okay, so now see, refund to store means what? Whatever they issued on 2nd January 2008. Okay, so out of this 100 units, whatever they issued, so this manufacturing departments, they return to stores 40 units out of this 100 units. Okay, so just see here, on this 2nd January they issued 100 units. Okay, so out of this 100 units, so they return 40 units on this 10th January 2008. Okay, so this refund 40 units, it will be in the stock. Okay, it will be in the stores. Okay, so that's why it is the receipts for the stores department. Okay, so 40 units at the rate of 1. Okay, at the rate of, out of this 100 they return to stores 40 units. Okay, at the rate of 1, the total will be the 40. Okay, again on this 10/1/2008 we have to maintain the stock. Okay, so the earlier stock is what? So this 300 as it is we have to keep, so 1000 we have to keep, plus on this date it is a plus, it is added 40 quantities. Okay, so now this 40 at the rate of 1, it's a 40. Okay, so now these are the 3 lots are there on this 10th January 2008. Okay, so next, on the next day, just see, on 11th January 2008 received 600 units at 1.20 per unit. Okay, so again they purchased on 11th January. Okay, now see, on 11th January 2008 again it's purchased how many units? Quantity 600 quantities at rupees 1.20. the total amount is 720. Okay, so again we have to maintain the stock, or again we have to maintain the balance. Okay, so on the earlier date there were the 3 lots. Okay, so take it as it is 3 lots because we not consumed this stock, so that's why it is remained, it is unissued. Okay, so take it as it is, this 300 first lot, second 1000 lot, third 40 lot, and again we have to add because it is the purchased new stock. Okay, 600, so 600 at the rate of 1.20, the total amount will be the 720. Okay, so next, on the next date, just see, 14th January 2008 issued 640 units. Okay, issued 640 units. Okay, so it means what? In the earlier date, so see here, on the 16th there were the, on 20 on this 11th there were the 4 lots are there. Out of these 4 lots we have to issue how many units, how many quantity? 640 quantity on this 14th January. Okay, so now see, we have to use the last in first out. Okay, so what is the last lots is there? First of all we have to issue that. Okay, so take it 600, still 40 units are remain, the take it one more, take it that next lots. Okay, so this 40, take it 40, so we consumed or we issued 640 units. Okay, so this 600 at the rate of 1.20 and this 40 units at the rate of 1. Okay, the total amount just written. Okay, so again we have to maintain this stock. Okay, so on this 11th January 2008 there were the four lots. Okay, so out of this 440 we consumed, 600 also consumed. Okay, so these 2 stocks are this remained. Okay, so take it as it is 300, 1000. Okay, so we maintain, just close it here. Okay, so next, on the next date, on 16th January 2008 received 200 units at the rate of 1.20 per unit. Okay, so again they received 200 units. Okay, so received means what's the purchase date, so it will come under the receipts column. Okay, on 16th January 2008 the 200 units received at the rate of 1.20, the total amount is what? 240. Okay, again we have to maintain the record. So on the earlier date there were the 2 stocks, take it 2 stock as it is, and we have to add this 200. Okay, so new stock 200 at the rate of 1.20 and total amount will be the 240. Okay, so next, on the next date, so on 20th January 2008 issued 240 units. Okay, 240 issued 240 units. Okay, it means transferred for 2000 for production purpose. Okay, 240 units. Okay, so now see, on 20th January 2008 we have to issue 240 units. Okay, before that date there were the three what lots are this. Okay, So we have to use the LIFO method. Okay, so take it from this to last lots is over the 200. Okay, take it as it is, these 200 lots at the rate of 1.20, total amount is 240. Okay, still 40 units we require, so this 40 units we have to take from this 1000 units. Okay, take it 40 units from this 1000, so we taken 40 units at the rate of 1.20, the total amount will be the 2240. Okay, so now again we have to maintain the record on maintain the stock or the balance on this date. Just see here, there were the 3 stocks, this 200 fully we consumed. Okay, out of this 1000 units we used only the 40 units, the remaining is what, 960 units the remaining. Okay, so keep as it is, so 3000 as it is we have to keep. From this 1000 we consumed the 40 units, the remaining is what, 960 units. Okay, at the rate of 1.10, the total amount 1056. Okay, so we now close this. Okay, so now on the next date, just see here, on 22nd January 2008, return to vendors 80 units received on 16th. Okay, whatever received on 16th, it is issued, it means what, the issued 80 units are the issued. Okay, so now see, so on 22nd it is the issued 80 units. Okay, what's the stock on the earlier date, 960 and the 300. Okay, we have to use the last in first out. From this 960 we have to take the 80 units. Okay, at the rate of 1.10, 1.8, it's 88. Okay, so now this 300 keep as it is stock. From this 960 we consumed 80, so remaining is what, 880 stock. At the rate of 1.10, it's 968. Okay, so next on the next date, on 25th January 2008, received 400 units at the rate of 1 per. Okay, so GR number is 32. Okay, so now see, on 25th again they are going to issue, and put it here GR number 32. Okay, and it is the received 400 quantity at the rate of 1, it's a total amount will be the 400. Okay, so the earlier stock is what, 300 and the 880, 300 and 880 plus these 400 added 400 rupees 1, it's a total amount is of 400. Okay, so we maintain this stock. Next on the last date, just see, on 27 2008, freight paid on purchases. Okay, so it is a freight charges, it will not come under this statement. Okay, so now see, on the next date, 30th January 2008, issued 500 units. Okay, so on 25th January there were the 3 stocks, 300 first stock, second one is 880, and last one is 400. Okay, so now we have to use the LIFO method. Okay, so first of all take this also, actually we have to issue how many units, 500 units. Okay, take it to 400 first of all, this 400 at the rate of 1, it's a 400, still 100 is required, take it 100 from this 880. Okay, lots. Okay, take it 100 just taken, so at the rate of 1.10, total amount is the 110. Okay, so now again we have to maintain the records, so 300 as it is. Out of this 880 we consumed the 100, the remaining will be the 780 at the rate of 1.10, 858. Okay, so like this we have to solve the LIFO method. Okay, I hope you will understand this problem. It's very easy. Okay, and so it is very important for your exam purpose. Okay, so if you understand, then good. If it is not understand, you can contact me, I will help you. Okay, so thank you.